All right, good evening, ladies and gentlemen. Good to see every one of you here. Thank you so much for being here and being on time today. My name is Alex from MarketWise Asia. All right, if you guys can hear me loud and clear, please say a hi to me in the comments. Today it is the 21st of January. It is as usual a Friday evening. Okay, so if you can hear me loud and clear, please say a hi to me in the comments. Okay. All right, I'm not sure whether you guys are fine with this Facebook Live because it seems on my side it is a bit laggy. If everything is all good and everything is well, right, just type OK in the comments. Just type OK in the comments. Okay. And of course, if you can give me a like and share, I will be also much appreciated. Okay, because it also tell Facebook that you want to see more of me in the future. Because if you don't engage with me, Facebook will deem that you don't like our content and will start showing you lesser and lesser of our Facebook feed, okay, on your feed. All right, so I think, okay, good to see that everyone, most of you guys are okay. All right, so let me take a look at the comments over here. Hi, Keen, Amanda, Gabriel, May, Alex Lee Yao Lip, Alex, okay, good name, okay. Ching Ha, Wei Lun, Swat Ha, Imran, Yen Dom, Peter, Adrian Quack, David, Yan Guang, Lu Brin, okay, good to see you. I think this is the first time I've seen you here. Edmund, Dan, John, Hui Ling, okay. So there are many of you here, okay. So too many, okay, but thank you for your support over here. All right, so I think people are still streaming in over here. Okay, market not okay. Yeah, market I think okay lah. Good to have a pullback over here lah. Okay. Anyway, just want to share with you something over here. Today I'm actually out for the whole day actually. Let me see over here. Okay, you guys can see my screen, right? Can see, right? Okay, so actually I am actually out the whole day. So in the morning, I had a business meeting with Societe Generale. So in short, it's called SocGen, Investment Banking, Investment Bank. So discussion might have a collaboration with them. And after that, I went for a high tea with my sister-in-law, my daughter, and my wife. All right. So and my sister-in-law today it is actually staying with us in my house. So it's kind of a camping trip that kind of okay with my daughter once again. Okay. So my sister-in-law will be sleeping in the room with my wife and daughter, and I'll be sleeping outside once again. So this is my sleeping mat, okay, my sleeping blanket, and also my pillow. So after my Facebook Live, after a rest, then I'll be sleeping outside the living room. Okay, I didn't quarrel with my wife. Just that my sister-in-law is with me, so I let her sleep in the room with my wife and daughter. Okay, so anyway, this is just something extra lah. So just to share with you what I have been doing. Okay, yeah, right. And yes, okay. So a disclaimer first. Okay, whatever I share today is just for education and informational purpose. It is not a recommendation, right? To tell you what to buy or what to sell. Okay, so Alex is always wrong. So please don't copy me. Please don't copy me. Okay, seems like the market is recovering a bit. Okay, all right. Yeah. So today's session is pretty simple. Just want to share with you the US and the Chinese market as well. So the US market has been tanking already. So for I think for the past 1 week, all right, while the Chinese market has been up for the past about 1 week also. So yeah, it's kind of it's different at the end of the world, different. Okay, so just share with you my views over here. Right, just a very quick show of hand over here. Right? So how many of you actually are bullish or bearish about the market within the next maybe 1 to 3 weeks? 1 to 3 weeks. If of course the market's been coming down, right? If you are still bearish on the market within the next 1 to 3 weeks, right? Type bear in the comments, all right? If you are bullish within the next 1 to 3 weeks, okay? Type bull in the comments. Type bull in the comments. All right. So as such, please give me a like and share. Okay, I think you appreciate. I appreciate your sharing as well. Liking is free, doesn't cost you money. Okay, so just give me a like and share. Okay, if you don't want to give me a share, doesn't matter. At least give me a like. So let me take a look at the comments first. So most of you are bear. Okay, most of you are bear. A few are bull. All right, mostly bear. Okay, and bear, bull. I'm wrong. Okay. Jimmy, what happened to Stuart Murphy class? Okay, so some unforeseen circumstances happen. So Stuart is unable to conduct the class. So we have already refunded the money to you guys. So sorry about that. Okay, so yeah, so Stuart is unable to do for the class. Okay, all right. Actually, some are boo. Actually, at the end, a few are pretty bullish. Boo, some bear. So actually, I've still that. Within the next 1 to 3 weeks now. So I think maybe about 60% is are bear, 40% are bull. Okay, so okay, I think a good census, still quite divided over here. All right, so I'll just go through quickly over here, just walk through some of the fundamentals. All right, then I'll go through the chart. I'll go through the chart. All right, so uh, let me zoom in over here. Okay, of course, if you have been reading the news, you should know that the inflation rate has been the highest for the past since as the highest in the 30 years. Okay, inflation rate highest in 30 years. Okay, so I'm going to share with you this chart over here called the slickcharts.com/inflation. I will post the link in the comments. You should see it in the comments. And for those who are watching the Facebook Live, all right, on YouTube, all right. Thank you so much for watching as well. If you can share, help me to share, subscribe to our channel, it will help as well. All right. So let me post this link over here. Okay, so this is the inflation rate. Inflation rate has been 7%. Okay, the highest in the past 30 years. 7%. Can you see it has been increasing all the way up? And 30 years, okay, you can see that over, let me zoom in. You can see bigger, right? So, for the past many years, inflation has been all 1%, 2%, 1%, 2%, highest in 2007, 4%, that kind, until about 1990, that is 6.11%, 6.11. So never been past 6%. It is only this year that it passed the 6% and becomes the 7%, right? Okay. So of course, as you know, inflation high. Okay. So and the Fed actually admitted that it is not transitory. So they admit that inflation could be here to stay. All right. So it's not transitory anymore, and interest rate is at a low. So what do they need to do? Okay, to curb the high inflation, right? Of course, you can type the answer, but I think you guys should know they have to increase interest rate, right? Interest rate has been at the rock bottom of here. So, recently, the Fed has signaled 3 rate hikes in 2022. That is this year. Again, this is expected. This is expected. All right. The Fed has been prepping the market for quite some time already. Okay, they always say that very soon there'll be a rate hike, very soon there'll be a rate hike, very soon there'll be a rate hike. So this is not something new, and I believe that it has already priced in already. The market has already priced in already. So this is really not new. Okay, so rate hike, they say 3 rate hike. Okay, not new. And of course, what happened to all the tech stocks, the growth stock, especially the growth stocks. Okay? Of course, interest rates are rising. Growth stock like tech need to deliver, much higher growth rate to justify the risk investor need to take for high return. So because right now, if interest rate is going to go higher, okay, which means that in the future, right, the money is going to worth lesser in the future because of the inflation rate and rising rates, right? As mentioned, right, reduce the value of the future cash flow by reducing the value of the current stock price. And for the past, many years, all right, especially since the COVID sell-off, because the COVID, right, it dropped 30%, right? So in order to save the market, right, the Federal Reserve actually pump in, all right, trillions of dollars. How many trillions I actually can't remember, right? Pumping trillions of dollars into the market right? I can share with you some stats over here. You can go to this site called Statista. Let me post the link in the chat as well, in the chat, in the comments. Okay, how to remove this one? Cannot see. Wait. Just now I can see. Now cannot see. Let me post here again. Okay. This one cannot. Just now I could see, but never mind. So you just now can see the chart, right? So essentially, it was up all the way. It is up all the way of the quantitative easing. Okay, let me go through this again. Okay, can use the Fred data over here. Okay, use this. I'll post the link for this. All right, Fred, the economic data, in the comments as well. You can see that, of course, you should all know, all the way, the M2 money supply. Basically, it's the money supply, M2 money supply price, not price as in the Fed has been printing money, okay, and especially after the financial crisis, they still print. It is only COVID sell off. They actually accelerate the printing of money into the economy. So you can see that the money is flooded into the market over here. Okay, so it is really print a lot of money. Okay, trillions and trillions. I think you cannot imagine how much is trillion. Just it is a lot. Okay, I don't want to explain too much. Okay, just know it's a lot of money. Okay, and that's the reason why there's a lot of money in the market, and all this money flooded into crypto or into the growth stocks, etc. Okay, but as mentioned, rising the rates, right, will reduce the value of the future cash flow, reducing the value of the current stock prices. So right now there's kind of a reset of the valuation of the kind of growth stocks, and I think by now you should know a lot of these growth stocks has been hammered down, like Palantir, Peloton, all these okay, CrowdStrike, Datadog, what else? Even like Netflix also came down a lot and such. Okay, I don't think how many of you actually invested in these growth stocks, and you are underwater now. Okay, it could be painful. Okay, but do share with me, right? Just type yes. You are investing in this kind of tech growth stocks, but are in the underwater now. Okay, under the water now. So let me know. Okay, so just have a census of how many of you actually invested in these tech stocks. All right, let me drink some water first. All right, so roughly right now you should know that all these are the narrative that the media and news tells you because of the interest rate increasing, no money supply, inflation rate is high. Okay, that's why the market is coming down. But I just want to remind you that, okay, this is just what the media is telling us. They are trying to explain why the market is actually coming down. Okay, but okay, rate high, interest rate, inflation, it is not something new. Once again, you should know, like last year, inflation has been creeping up. The Fed has been signaling that it's going to rate high. So it is nothing new, okay? What, from a technical trader perspective, what I see is that, the market has ran up a lot already. So I'll share with you the chart later, okay? So it is actually time for a pullback right now. So okay, without going into the chart first, okay, my personal view is that without bearing any other unforeseen circumstances, okay, no black swan event, I still think that the market right now, it is still on a uptrend. Okay, there's nothing to fear. Right now, it is still in a correction. So why do I say that? Okay, let me go through the chart right now. Okay, let me go through the chart right now. Of course, this is the S&P 500 futures are ES. This is the ES over here. I think this view is better for you guys, right? So obviously, this is a very short time frame, just within a few months. is it okay like this? Okay, like this, is it up or down recently? Is it up or down? Obviously, if you just view in this context, right now, of course, it is down, right? It is down, very very clear cut, right? So if we zoom out, for a few years, not for a few years, maybe 2 years, okay, at this moment in time, okay, like that, do you think the market it is still on an uptrend or on a downtrend? Is it up or down? All right, since after the COVID sell off. I don't know what's your view. Some might say it is down, but someone might say it is up. So I want to hear your view. If you think it is up, just type up in the chat, in the comments. If you think it's down, just type down in the comments. Is it up or down based on what you are seeing in the chart right now? Okay, in the chart right now. All right. This is a naked chart. So I have many lines. Okay. Long term is up, right? So long term is still up, right? So to me, it is still a normal pullback to me. Okay, if you want Darius to see my trend line, then it's like this lah. So a lot of things. So I don't want to confuse you guys first. Okay, don't confuse you guys first. Okay, so if I add in my indicator, okay, even for the Dow also up, Nasdaq also long term it is still up. Okay, so let me go back to the S&P 500 futures over here. Okay, this is my usual template over here. Okay, so even though I say it is up, but you need to realize that, okay, you realize that this is a blue-green, and such. This is basically the elder impulse, which I mentioned last week. Some of you might not know. I'll just remove that first, the normal candlestick chart. Okay, so for those who are with me for some time, all right, this is the daily time from S&P 500. Can you see that every time it is above the cloud is acting as a support. Okay, but this time around again, it is a bit different. This is the S&P 500. It is actually below the cloud. All right, downtrend based on the daily time frame. All right, downtrend based on daily time frame, and it is below the central pivot range. Okay, for those who don't know, never mind first. Okay, just listen to me first. Essentially, these green dotted lines, all these are the central pivot range. Treat it as a support zone. Okay, once broken, become resistant. Okay, and such. All right, so it is on a downtrend. Daily time frame perspective, daily time frame. Okay, so we are looking at a multiple time frame perspective. All right, so if we go to the Nasdaq, all right, once again, there could be some, whipsaw, up, down, okay, that kind, all right, but overall, most of the time, okay, it is still up, and now it is very clear cut that the Nasdaq, it is actually below the cloud, so it is on a downtrend based on the daily time frame. I need to stress that on daily time frame. All right, and once again, I mentioned already, nowadays I like to view the 2-day time frame, 2-day time frame, 2-day time frame, 2-day time frame, 2-day. All right, so you read the daily, you read the weekly and monthly. That's the most of the people are reading the time frame, right? The daily, weekly, monthly. So now I like to add into 2-day also, because it give me another perspective, like what elders say, right? You need to sometimes see things differently that other people don't see. Okay, so I like to see 2-day time frame. I switch to 2-day. All right. So if you use it as a 2-day, okay, after the COVID crash, never once was priced below the cloud. Okay, never once was priced below the cloud. So it is still on an uptrend. Okay, but right now, price is actually below the cloud already. So it is also on a downtrend based on the 2-day time frame. All right, and for the S&P, all right, the Nasdaq is actually the weaker one. For the S&P, okay, right now we are actually hitting on the cloud support right now, right? Just trying to survive on the 2-day time frame it is still on an uptrend, but barely surviving. So again, once again on the S&P 500, can you see that after the COVID crash, never one time it was below the 2-day time frame, always above the 2-day time frame as well. All right. So right now it's there. And for the Dow Jones 2-day time frame, all right, it is also above the cloud. Okay, above the cloud, and it is also at a support right now. Okay, that's why I can see that today, at this moment in time, okay, you can see that the market actually kind of rebounding off the cloud support over here. All right, of course, if tonight the market actually really turn bearish at the closing time, then of course it could be pretty bearish. But right now it is kind of still supported right now. Okay, and all right, I want you guys to take note of this thing called the yearly pivot. It is the start of the year, right? So can you see all these green line over here? These are the central pivot range, the green one. These are the monthly pivot. And because it is the start of the year, okay, you should take note of the yearly pivot. Yearly pivot, which means that you take last year the high low close and work out the support resistance line for this coming 2022 lines. All right. If I add the yearly pivot, it can be very confusing. Okay. Okay, very confusing. So a lot of lines over here. So okay, so don't worry. I will do it just for the yearly pivot over here. Let me do a template. Yearly pivot. Do I have yearly pivot? Let me see. Let me see. I think I have. Okay. All right. So I just do the yearly pivot over here. Hide this. Okay, back to daily time frame where most people are more familiar with the yearly time frame, as in based on the normal daily time frame. So, okay, my game plan is this. Right now, we are kind of oversold already. Okay, I am suspecting. Okay, price will hit the yearly central pivot range, which is this area over here, which is at about 4,403. Very near already. Okay, we are hitting near a yearly pivot support. It is a very important support level. Very important support level. Okay, all right. Okay, very important support level. Let me see over here. Then for the Nasdaq, can we see we are actually have broken below the yearly pivot level, okay, but hitting near the lower range of the yearly central pivot range. Okay, so for those who don't know, okay, the middle line it is actually the pivot level. This is the upper range. Okay, this is the lower range over here. So we are hitting there also already. So I think by today or next week, early next week, we should be able to hit this level. And once we hit this level, I think we are at a good support. Okay, we are at a good support. Okay, that's the reason I just want to kind of calm you down. Okay, we don't be so bearish. We are going to hit a very crucial support right now. Okay, and before I go into that, okay, for those who have been following me, right, you should know. I mean, how many of you actually follow me since late last year until now? I was actually bearish on the market. I was bearish on the market. Okay, anybody know the reason why I was bearish on the market or not? Okay, of course, right now I tell you that market could be hitting a support, but prior to that, anybody have a remember why I said I was bearish about the market or not? Again, I'm not trying to prove that I'm a guru or what. I'm just trying to share with you my thought process. Okay. Darius, yes. One of that is the VVIX over VIX. Okay. Darius is right. So it's over one of the. I learned this from Bini Ong. Okay. So I have to credit her. Okay. Yes, I learned that from her also. And of course, my own understanding is that last year, I actually asked, in the Telegram channel, I asked that how many of you are actually bullish on the market this coming year. In fact, 80% are bullish on the market this year, then I know that I need to be careful already. And if I look at the S&P 500 futures, okay, the weekly time frame, all right, the market is actually, very, very extended, very extended, okay, not much pullback. So over here, at that point in time, correct or not? So at that point in time, it's like this, correct or not? It's like that, right? On the right hand side of the chart. So after the pullback, as in after this pullback, not much pullback already. So I was thinking that it could be ripe for a pullback anytime soon. Okay, so the overextended move, the consensus, right, the voting, and also the VVIX. Okay, let me share with you the VVIX over here. Okay, VVIX. This is the VVIX2 line chart over here. Okay, VVIX. Where is it? VVIX. Yes, over here. Okay, so for those who don't know, doesn't matter. I won't want to go through this again. Essentially, okay, VIX, you guys should know, right? Is the VIX to measure, the fear factor. Okay, correct. Call it the fear gauge, right? And the VVIX is actually measuring the volatility of the VIX. So it's like a differentiation of the VIX, the rate of change of the VIX itself. Okay, so without going too technical about it, I actually mentioned that in my, I think, previous Facebook Live. There was a divergence over here while the market was actually going up. All right, the VVIX over VIX, the ratio is actually coming down. So it's a divergence. Okay, the last time it kind of showed like that, it was during the COVID sell-off. The orange chart below is actually the SPY, the S&P 500. So this was the COVID sell-off over here once again. So while the market is climbing, right, the VVIX over VIX, the ratio is actually showing a divergence as well. So after that price kind of just COVID crash. So that was the reason why I was kind of prepared. Okay, that there could be a correction. There could be a correction. So of course, I say that probability, it could only, okay, it doesn't mean that it will. So right now it has proven right that there is a correction. So at that point in time, I also do know that there will be a correction so soon, because the market can just do a the market can just continue to go higher, right? So yeah, but it has proven that price right now has actually came down. And yeah, okay, so this is the elder one. Okay, so yeah, so that's the reason why I was bearish. All right, so right now it was the past already. Okay, that's the reason why I didn't kind of overtrade. I was thinking that the market could do a serious pullback and don't overtrade. I mentioned that a few times in my Facebook Live already. Of course, if I know it, then I will sell my wife and daughter away and just dump everything together and just short the market Okay. Anyway, I think I mentioned in my last Facebook Live, or the previous two Facebook Live okay, I actually shorted somewhere around this S&P. First time I shorted somewhere around here, okay, and then I covered somewhere around here because initially I thought that maybe there's a long shadow over here, price could do a rebound and such but eventually it turned out to be a fake move, all right, a false break and then come back down again. So I actually long over here, two stocks. Then I cut it and I turned short again. I shorted the QQQ. That's the Nasdaq. So right now I'm still holding the QQQ. The QQQ. Yeah. So I shorted QQQ. It is Nasdaq. Okay. So QQQ. I put here QQQ. Better QQQ. Yes, I shorted somewhere around here. Okay, right now I've still holding. I already exited half. I'm still holding on to it. Okay. And by the way, I mentioned that I actually, shorted SPY here previously, but I covered that, closed the position because, it was rebounding up and I bought two stocks. Do you know what are the two stocks that I actually long or not? If I told you, then, you're very kind of a kick sim, feel, sayang, that kind of. I actually long LVS, LVS, okay? I long LVS, but thinking that the market came back down again, I actually closed the position here, okay? And then the next day, right, the market just chunk up how many percent? 14%. I don't know what's the reason. I didn't go and read it. I was like, how come I didn't hold on to it, And the other stocks, right? You guess, right? It was in the news recently one. Okay? ATVI, Activision Blizzard. Okay? It was really, I can't describe it as saying, fuck, I actually long ATVI and LBS, these two. And the reason I long is somewhere around here. Okay? Impulse move, pull back to the central pivot range, okay? I long, but thinking the market was weak, okay? Never mind, I just closed the position. And then 谁知道, okay, the next few days later, okay, the Microsoft announced that they're going to acquire Activision. And, my risk was somewhere around here. I entered somewhere around here. I could, take 1, 2, 3, maybe four or five times my risk reward lah. Okay, no, Karen is not June. If June, I would just held on to it already. Okay, but I didn't. Okay, it is just pure luck. I was doing some screening that I screened out these two, but I didn't hold to it. But doesn't matter. Okay, doesn't matter. So as long as I don't lose money, okay. We don't say Alexa already can buy already. Okay, Kenna can buy now. So anyway, yeah. And again, okay, even though I'm telling you that what I actually shorted like SPY, QQQ, okay, I'm not trying to tell you that I don't want to give you the impression that Alex is always right one. No, okay. Alex is wrong sometimes, okay. And one of the wrong thing is actually I shorted GDX, gold miners, okay. So the reason why I shorted it is because it actually hit the yearly, hit the central pivot, hit the central pivot range over here. Okay, and I was doing a short lah. Okay, I was shorting it, but in hindsight, I shouldn't have shorted gold and GTX lah, because okay, I didn't short gold, but I shorted GTX. But most of the time, I find that the gold miners will lead the gold, so I prefer to short the gold miners. But seasonal wise, actually gold right now is actually kind of bullish lah. Anyway, okay, so I shorted and then boom, went up lah. So I actually cut loss on that. Doesn't matter to me because it's just one position. But let you know, so right now gold is still kind of a bullish right now. But can you see that gold, right? Okay, it's hitting the yearly pivot already. Okay, it's hitting the yearly pivot. Let me try to show you. Can you see this black dotted line over here? It is hitting the yearly pivot. That's the reason why there is a correction now. Okay, so one stock over here. So to let you know, okay, I also went into wrong position one. Because I don't want to give you the impression that Alex shorted, QQQ, SPY, want to make a lot of money. I mean, I still have losing position, but as long as my winning position cover the losers, then that is fine. Okay, and the other one I shorted also based on some screening. Okay, another one is just want to share with you, not all position, but some of the positions that I entered. I also shorted this APP, app loving. Okay, app loving over here, and then yeah, I shorted somewhere around here. Price came down quite a bit. I exited half, still holding on to it, trailing, and I also exited this called the DLO, D Local Limited. Okay, and the reason why I shorted it is because IPO went up, dropped below the IPO price, bearish really. Okay, and the market sentiment is weak, and based on the fundamentals, I was checking the discounted cash flow and such, the intrinsic value, I think it's only, I'm not mistaken, it's only a few dollars or what. So, I shorted that. Also, I think I shorted somewhere around here also. Okay, so price came down. So exited half, and I'm still holding on to it. Okay, so these are the few positions that I'm holding short position. Okay, another position that I'm shorting, it is UNG. UNG is a natural gas. All right. So natural gas. Can you see the black dotted line over here? Okay, it is actually the yearly pivot. Hit here, and then price came back down again. So I actually shorted UNG as well. I shorted somewhere around here. Okay, short somewhere around here. So I'm still holding on to it. So these are the few positions that I am in profit. Okay, but I need to remind you that I do have losing position, like the gold miners where I just entered wrongly lah. Okay, doesn't matter. Just part and parcel of trading and such lah. Okay, so and okay, before I go into that, right? So these are some of the position, my views. All right, let me go through my thing over here. Okay, I also want you to share with you some of the things that I'm looking at. The big cap, mid cap, and small cap. Okay, if you are looking at the big cap of obviously S&P 500. The small cap wise is actually this. I'm sure you zoom in. Okay, indices. Okay, the small cap, mid cap. Okay, mid cap. Let's do mid cap MDY. So it is not just the big cap that is coming down or what. So in fact, the mid cap MDY, S&P 500, S&P 400, S&P 400 mid cap MDY. All right, it is actually on a downtrend as well. All right, so let's switch. Okay, let's switch to a moving average now. Okay, I think most of you are very familiar. Whatever you see it. Okay, make these thing settings over here. Remove this. Okay, so most of you guys should know moving average, and this red line here is the 200 days moving average, 200 MA. Okay, so right now price is below the 200 MA for the S&P mid cap. All right, for the small cap is SLY, S&P I think 600 small cap. All right, it is also below the 200-day moving average. Obviously, the S&P 500, the SPY, it is still somewhere around there. Okay, somewhere around there, near the 200 days moving average. Okay, so the mid cap, small cap, they are already coming down. Okay, and the QQQ, take a look. It is already below the 200 days moving average already. Okay, so midterm, maybe within the next 1 to 2 months, I believe personally, okay, I believe there could be more sell off. All right, so if you look at the weekly chart, like for example the Nasdaq over here, oops, move the tiles over here, weekly chart over here. Yeah, I think can be messy. Let me do naked. Okay, naked chart over here. Okay, so this is still a normal pullback. So as I mentioned, the yearly pivot, I once again, I show here yearly pivot. All right, we are somewhere around the low. So this is also the prior low over here. Okay, so hitting the support. So next week or so, there could be a technical rebound, or maybe even though might not hit, but next week there could be a technical rebound. So we won't know I don't know how things will pan out, but I don't want to sound too bearish now. Okay, so next week I think there could be a technical rebound. Okay, technical rebound. So also near the yearly pivot already, there could be a technical rebound over here. Okay, all right. So let's say I add in my usual indicator, the cloud, right? Okay, so okay, with the yearly pivot here, okay. So the potential path is that, price could rebound like that, and then take cat bounce and come back down again. All right. Another possibility is that, price could do like that, hover around that, okay, and then come down again, okay. Or another possibility is that price could just do a V-shaped recovery and go back higher, right? So these are the few scenario you need to, anticipate lah. Okay, so these are the few scenario. And all right, let's say if the market really continue to go down lower, okay, to go down lower like ping pong like that. Okay, if I go back to a 2-day time frame, weekly time frame. Okay, sorry. All right, weekly time frame. There's a chance. If price continue to go down lower, price could go down to somewhere around this S&P 500 futures, so somewhere around 4227. Okay, this is the black dotted line over here. Okay, 4227, somewhere around here. If the market continue to go down lower, so you need to see on a weekly time frame, we are still on a very nice uptrend. So if I seriously don't know how the market will react, but we have to just watch the price action. Okay, so we are still uptrend, but midterm wise, within the next or maybe 1 to 2 months, price could still continue to go down. Within the next 1 week or 2 weeks, there could be a technical rebound. Okay, that's my personal view. That's my personal view. Okay, for the Nasdaq. All right, once again, okay, it is still on an uptrend. Can you see there's a weekly time frame on a nice uptrend? All right, let's say for example, if price continue to go down lower, okay, it is not surprising that price could head down to the cloud area support level over here, which is also at the standard support resistance over here in this line over here, which is at about let's assume that price hit this cloud and this S1 level. It is about 13430. Nasdaq futures 13430. Okay, so yeah, I would prefer price to do a steeper pullback. When price do a steeper pullback, I know that the uptrend has still a long runway to go. Okay, I'll prefer that lah. So yeah, so again, my stand is, I think, is it clear to you or not? Okay, long-term wise, I'm still bullish. It is still on an uptrend. All right, so no need to fear. Okay, and if you're talking about short-term wise, within the next 1 to 2 weeks, okay, I think there could be a technical rebound because we're hitting very near the support level already. Okay, and it's really oversold. There could be a technical rebound. All right. Again, don't short now. Okay, you should be shorting somewhere around here and shorting somewhere around here. If you short now, I always say it's TMP. All right, 头脑派. Okay, you should sell high, buy low. Okay, not sell at low, then buy back higher, that kind. All right, no. Yeah, Kilian said like I don't want to short. Okay, I really shorted already. I don't want to short already. So I'll be looking. If I really want to buy, I looking to buy, not looking to short now already. Because as I said, there could be a technical rebound. Midterm wise, within the next 1 to 2 months, I think there could be further sell off. All right, so that is my view. Okay, and it is clear so far. If everything is clear, everything is okay, you understand what I'm trying to say, type yes in the comments, or I take a look at the comments. Let me see. Sorry, I'm trying to just go through the things, so I didn't look at the comments so much. Let me see. Okay. All right. Oh, yeah, talking about market breadth. Okay, I'll go through market breadth later. It's a market retrace higher and such. Darius is asking, right? is there any way to do a VVIX or VIX analysis for Nasdaq? No, because the VIX is actually on the S&P 500 futures. Okay, so yeah, it's on S&P, so cannot do on the Nasdaq. Can do on the Nasdaq. All right. Kang Lim is asking how the VVIX and VIX could be added as an indicator. Okay, so the VVIX, all right, you can use it. Just search. So VVIX is in trading view already. So this is the volatility of the VIX. Okay, VVIX, it is here. All right, and the VIX is also here already. Okay, so very simple. You just do a ratio. VVIX. Okay, then you slash VIX. All right. Then you get this really change. You change to the line chart. Then there you go. That's the divergence that I mentioned just now. Okay, can let me go through this. Yes. Let me see where the comments are. So you don't want to exit your short QQQ today, huh? No, I won't be exiting today. I won't be exiting today because I already exited half. I'm already in profit already. So if price really reverse, keep back up, then so be it lah. So be it. I'm okay with that one. So I want to have some buffer in case within the next 1 to 2 months, there is still sell off, I could still benefit from it because I already exited half. So psychologically, I'm pretty strong because I know that I'm profit. If hit my entry price, go back my entry price, I'll just get out. So I have no loss, nothing. So I will still stay on to my shorts. Okay. Alexander Elder was more pessimistic. So Kit Long, yes. So I believe you actually watched the summit. But you need to understand that from Elder's perspective, he didn't say what is his time frame. He's pessimistic, could be just within the next 1 to 2 months. I don't know. So just have your own judgment. I don't know whether it's like a few years, that kind of, okay. But for me, personally, short-term wise, because he told me that he trade short-term. So I'm seriously don't know whether he meant it long-term or short-term, mid-term. So I have to put things in context. Can? All right. Maria, what do you mean by short? So Maria, I think you are a new trader. In trading, when you want to make money, right? You buy low, sell high, right? So shorting is actually the reverse. Okay, you sell first, then you buy back at a lower price, to make the profit. In short, you make money when the price is dropping. Okay, compared to normally how you money is that you buy when the market goes up, you make money. So shorting is that you make money when the price comes down. All right, Ken? Alexander Elder shows no divergence indicating self-convenience. Do you agree? Personally, I don't look so much into divergence lah. So yeah, I can't comment on that. Okay, so yeah, I don't really look into divergence. It is good to have, but I don't really look into that. All right, and I just want to I walk through the big small thingy, right? So I just want to share with you, right, because of the higher interest rate that's coming, which all of you should know already. Okay, what can benefit from all this? Okay, just I walk through. Okay, value versus growth. Of course, right now, because of the interest rate hiking and the narrative is there, of the interest rate hike, there's a reset of the valuation of all these growth stocks. Okay, so all the growth stocks are being hammered. And if you take a look on this data over here, this is the ETF list. Oh, by the way, if you want to get access to this ETF list, especially if you are new here, I have this more than 200 compound ETF, the major ETF, right? The industry, all right, the sectors, industry, airlines, energy, financial, everything. Okay, everything, basically everything. Indices, what the major ones, small cap, big cap, large cap countries, Hong Kong, Australia, New Zealand, Singapore, that kind of commodities as such. I have this list. I think it is very good for you to have overall view of the market. If you want to download this list, you can go to this link over here. Okay. I'll post the link in the chat. So back to this. Okay, value over growth. So value, it is actually style. Okay, can you see over here? All right, value, large cap value, and large cap growth. So to compare the large cap value and growth, VTV versus VUG. All right, VTV, value ETF versus VUG. All right, growth. Naked with just the cloud only, then this. Okay. All right. So can you see that, for the past few years, interest rate low, the Fed pumping all the liquidity, all the money in actually go to a lot of these growth stocks. So we actually within the last few years, right, nobody thought of value investing and such. So people say the value investing is there. You need to invest in the super stocks, growth stocks and such. Okay. And I think right now the value stocks are making a comeback. Right. If you walk in terms of a 2-day time frame or even a weekly time frame, you can see that the growth stocks actually outperform the value stock. But recently, the value stocks has actually, starting to, turn into an uptrend, which means that, within the next few months or so, or I don't know how long, okay, can see the price has really broke above the kind of a cloud over here. And this means that, the value is kind of outperforming the growth stocks now already. Okay, so it's kind of taking turns. For the past many years, a lot of cash, a lot of liquidity, money all pumped into the growth stocks. Value stock kind of underperform, and right now we're kind of seeing reversion to the mean. There's a possibility that all the value stock that is coming into play. Okay, like the materials, industrial, financials, that kind of okay, and maybe the tech, especially the tech. Those that are loss-making one, they are not going to, might take some time to recover. Okay, so I didn't put that. Did I put that? I didn't put that. So some of the things that could benefit, okay, are the finance industry. Okay, some of the finance. I put that. Okay, finance. Okay, financial, FINAN, financial, FINANC, financials. Okay, commodities. This will benefit COMMODIPIES, commodities like energy and such, which you already seen. Okay, it has been going up. Okay, ENERGY energy. Okay, and utilities. Okay, and big profitable tech stock. Okay, those growth stocks, they are not making money. Because of the interest rate hike, they might see more selling. Okay, so you need to find those tech stocks that are profitable one. Okay, and of course, value stocks could be in play as well. That kind of okay, and these are some of the things that I are more bullish on that. So bearish one, the bearish one are okay, those are loss making tech lah. Okay, so these are the bearish that I'm kind of more bearish on that. Okay, let me take a look at the comments. What are the value stocks? Okay, so the value stocks, right? You can go to ETF.com/VTV. Okay, you can take a look. VTV. ETF.com/VTV. This is a large cap value stock. Of course, how they define value. All right, to determine value, VTV index use a PB, price to book ratio, forward PE, historic PE, dividend price, sales to price ratio, and such like. And some of these stocks are the big cap one, like this over here. Okay. Berkshire, United Health, JP Morgan, Pfizer, Bank of America, a lot of bank stocks lah. Okay, and such. So you can go to all these ETF.com/ the ETF ticker and take a look. And if you want to take a look at the small cap one, like for example, small cap value Vanguard is a VBR. So go to ETF.com/VBR. Okay, just go. Okay, so again, you can go here and search. Okay, so these are the small cap. What they deem is small cap lah. Okay, the index, Vanguard, things like Signature Bank. Signature Bank actually ran up quite. Actually, Signature Bank is not small. Okay, I don't know how they classify, but you can take a look. But generally, okay, my idea to tell is that value could outperform the growth stocks, this year. So yeah, to do that, okay, and yeah, and some trade ideas for you guys this week, okay. Okay, let me take a look from here first. Okay, I want to share with this US versus the rest of the world. Okay, I saw this chart when I seen Alvin from Dr. Wealth actually presented. So I first seen this chart. Okay, of course he also took this chart from somewhere else. Okay, I actually have this chart over here. All right, can you guys see? Can you guys see the chart? If you guys can see, just type yes in the comments. Type yes in the comments. Okay, so basically this is the US, okay, versus the rest of the world. Okay, ex US lah. Okay, can you see that they kind of take turns to perform? All right, so since the purple one is rest of the world, the gray color one is actually the US. So can you see that, purple one, the rest of the world, or we can say the emerging markets, okay, they are actually outperforming, okay, all right. Then US underperform, outperform, underperform, outperform, underperform, outperform for US lah. And for the past how many years? 13.6 years, because of the massive QE, right? Money printing, the US has actually been outperforming the rest of the world by many, many miles, okay? Outperform already. So could it be, okay, the start that, the rest of the world, like China, emerging markets and such, that could start to outperform the US? That could be that. It could be the start of it, just a potential one. Do you guys get what I'm trying to say or not? So it's like always take turns. One certain period, US outperform. After that, they change to emerging markets, to rest of the world. They outperform compared to the US market, and then the US outperform again. Then the rest of the world outperform, and ping pong lah. So after so many years, we could see, the emerging markets start to outperform the rest of the market again. So I think I share in the WhatsApp chat also. If I'm not sure whether you guys saw it over here, I actually asked, what are the countries that it has been really performing and such. So like the rest of the world, in fact, like Greece, Peru, okay, Peru. Let me take a look at the chart over here. Greece is GREK, okay, daily time frame. Okay, they're actually performing pretty well. See, at the start of the year, while the US is getting hammered, they are up. They're up. Can you see or not? They're up. So how many percent since this starting of the year? Okay, so money could be flowing to the rest of the world. Okay, compared, money flow could be out of the US and going to other parts of the world, if like China or even China and such. Okay, Ken? And like Peru, EPU, okay, You can also see you can see Peru, while the US is hammered down, like ETF, Peru, they're going up as well. Up how many percent? So don't know. Since the start of the year, they are up 30% already, about 30% already. Yeah, about 30% already. See, so the rest print money as well. I think even for the Europe, for the Japan, they're all printing money as well. Okay, they're all printing money as well. So I think, I don't know, I'm gonna just data for you to see, okay, whether you think that the rest of the market is going to outperform the US. It is for us to see. Okay, for us to see. Okay. I think that's all for the US lah. Okay, I think US pretty simple. Let me see the market right now. Right now the market, it is green. Okay, so I foresee within the next week or so there could be a rebound, short-term rebound. Midterm wise, still bearish. Okay, might come down a bit more. Okay, might come down a bit more midterm within the next 1 to 2 months. Long-term wise, I'm still bullish. Okay, all right, Ken. So I'm going to head into Tracy asks, can you EPU can trade on Ting or Swim? Yes, EPU, it is ETF listed on the US. It's listed on the US, so you can trade. Can, but of course, I'm not asking you to buy EPU, the Peru and Greece. I'm just telling you that these are the emerging markets. They are outperforming the US right now. Okay, well, I've talked about 1 hour already. Are you guys learning something so far? I'm just okay. Just my personal view. I could be rambling. My school of thoughts can be mixing around here and there. So sorry for the the here and there. The knowledge. So if you think that I think you think that I'm bringing some value to you, learn some new things, right? Type value in the comments before I move on to the China stocks. Okay, 1 hour already. Okay. 1 hour already. So yeah, if you think that everything's okay, I bring some value, do give me a like and share as well. Liking is free, doesn't cost you money while I drink some water. No, I don't talk non-stop 1 hour. Thirsty. All right, so for the Chinese market, I'll go through quite briefly. All right, so I don't talk about the Asia and such in the Chinese market. I'll basically talk about the Hong Kong market and some of the Chinese stock that's listed in the Hong Kong market. Okay, so of course, a very hot index that people always watching is the Hang Seng index, Hang Seng, Hong Kong index. So from this chart, is it up or down? This is the Hang Seng daily time frame. Is it up or down? Is it up or down? You tell me, is it up or down? Is it up or down? I think there'll be a lag, so I'll wait for the reply over here. So is it up or down for the Hang Seng index? Let's do up or down. Okay, I'll add in my chart. Okay, so this is the daily time frame. All right, daily time frame. What do you guys see? Okay, it has been above, below the cloud, right? Okay, it seems like based on the Hang Seng index only, the Hang Seng index is, there are many components, stock components, see. It's starting to break above. I want to remove the elder one. Okay, okay, starting to break above the cloud. Okay, in case you are getting bullish, okay, don't enter everything at one go. Enter in tranches. Okay, maybe you have 100K, right? Maybe enter maybe up to you lah. Do 20K first, then 20K, 20K, that kind lah. Or you want to divide into 3 tranches, put in 30K, 30K, 30K. Okay, assume you have 100K lah. Okay, don't put everything on go. Even though price is just broken above the cloud, it could signal the start of a uptrend based on the daily time frame. But before we get too excited, all right, I want to share with you that based on the 2-day time frame, all right, it is still on a downtrend. Okay, it is on a downtrend. Okay, you can see that ping pong, up above the 2-day time frame, uptrend, then downtrend. So, all right. Not only that, if I add in the yearly pivot, okay, yearly pivot, okay, all right. This is the yearly pivot over here, horizontal. Oops. Let me see. Sometimes I cannot draw the line. Irritating, don't know why I'm not. Okay, this is the line over here. Okay, so this is the horizontal line, yearly pivot. It is here. Can you see that price ping pong at the yearly pivot, trying to go back to the yearly pivot over here. And I think there could be a resistance at the Hang Seng Index, at the resistance at about 25744. Okay, about that, okay, 25740. So I am 90% pretty confident when hit the yearly pivot, there will be a reaction. There will be a reaction. So hold your horses first, even though daily time frame, it seems to be above the cloud. So when price hit this level at 25740, about there, okay, nearing ready, I think there will be a resistance. Okay, I would only be more bullish, okay, if price actually, go above the yearly pivot, break above, and then come back down, retest, hold support. Then I will really be bullish on the Hang Seng market. Can? This is the HSI. What about the Hang Seng Tech? Hang Seng Tech. Hang Seng Tech is all the tech stock over here. Okay, before you get bullish also, it is still below the cloud. It is still below the cloud. So the tech not so fast, even though recently price has been going higher, and I know some people seems a little bit excited thinking that there's reverse already. If you are doing value investing, okay, you want to hold for a few years, that kind, okay. So you average down, you buy more when it drop, okay. But if you are doing kind of a position, I will still think that hold first, okay. I would want to see at least a break above the daily time frame over here on the Hang Seng Tech over here. On the 2-day time frame, right, it is still below the cloud. So, it is still not, out of the woods yet. So hold your horses. Don't be so kanchong. All right. So the one that I'm really interested in, it is actually Baba also. Baba. Okay, let's talk about Juju Baba okay, in the Hong Kong one. So recently again, people are kind of excited once again. All right, thinking that it could really turn into uptrend. Okay, but based on how I view the market, the Alibaba, for example, okay, it is still below the cloud. It's still below the cloud. So recently, even though it is heading higher, okay. So 2-day time frame, it is still also below the cloud. And once again, I am kind of 90% sure when it hit the yearly pivot, okay, that is 166. Okay, 166. Is it 166? Yes, 166. Juju Baba in the Hong Kong one, 166 Hong Kong dollar. Okay, it will have a reaction over here, 166. Okay, so I am actually waiting to buy lead calls on Alibaba. Okay, but not yet. I'm not buying first. So I'm still waiting. So even though the Chinese market, the Chinese government said they're loosening their monetary policy by reducing the interest rate. So this caused some rally in the Chinese stocks. So but I'm still not so bullish until price can break above 166 for the Alibaba. Okay, for the Hong Kong, for the US listed ADR Baba, also the same over here. It is somewhere around $167. This is the central pivot range over here. Only above that, then I will be more bullish on the Baba as well. So same for like, Tencent, Tencent, right? So Tencent, yep, okay. Tencent, slightly more bullish than Baba, but we're also hitting near the yearly pivot. That's the dotted line over here. That is at about 500, 500, okay, 500. Not the singer 500, yeah, 500. Then, I will be more bullish on Tencent. Almost there already. But again, I'm quite 100%, not 100%, 90% sure that when price hit the yearly pivot, it will have a reaction. Can? 3690美团 all right, also going to hit the yearly pivot. I'm quite sure that when price hit there, right, like here, okay, there could be kind of a reaction, come down, kind of reaction, come down, that kind. Okay, go above supported, go above supported. So once again, I'm 90% sure when price hit all this central pivot range yearly CPR, there will be a reaction. Of course, the major one will be this yearly pivot at about 288. Okay, 288. Okay, that kind. Okay. All right. This is Meituan. B2 by 2, right? B2. Okay, above the cloud. Above the cloud, but 2-day time frame, it is still below the cloud. And the yearly pivot for by 2 is quite high. But again, if you really want to get in early, break above the 2-day time frame, then maybe you can enter in trenches lah. Okay, that is at least about 173. At least about 173, that kind. So for those who are new to me, I use the cloud to help me to determine the trend. Okay. Jasmine is asking JD. JD 9618. Okay. Almost there also. So a lot of these Chinese stocks, they are going to hit the yearly pivot range already. The yearly pivot. So it's a black dotted line over here. This is the black one. Okay, so almost there. So okay, yeah. Need to go above the yearly pivot, then I will be more bullish. For JD, yearly pivot is about 311, 311. At least go above lah, okay? Again, I'm not asking you to buy. I'm just telling you that price need to hit certain level, tested, come back, retest again, then I'll be more bullish. Can? All right. Xiaomi, what's the ticker symbol? Xiaomi it is 1810. Okay. Xiaomi is actually less bullish. Xiaomi is actually quite weak. All right, Xiaomi. So again, this is a day time frame below the cloud. No go. Okay, 2-day time frame, it is also way below the cloud. All right, so Xiaomi is still a long way lah. If you really want to be bullish, so yeah, can Xiaomi even at the lower range, pivot range, right? It is at about $21. So still long way to go. Still long way to go. Can? James is asking, what's the rationale using yearly pivot on daily time frame? Because the yearly pivot, okay, it is a higher time frame support and resistance. So naturally, okay, when price hit that support or resistance, it's going to react at those level ones. Just like how you look at a weekly time frame, okay, to find support on the daily time frame. It is the same as that. So because a higher time frame support is always holds a very kind of a weight on it. So when the daily time frame hit it, it's going to have some reaction on the higher time frame support and resistance. Okay, Ken? Okay, Kang Lim, all right. Share a short demonstration on how to the correct setting. Okay, yeah, this is pretty simple. I already did that already. So I have this tutorial. Let me post the YouTube link over here. Where is it? YouTube tutorial. I'll post the link in the comments, so you can see how I add the cloud and the pivot points and the central pivot range into trading view. All right. SMIC. Mary is asking about SMIC. Okay, SMIC. What's SMIC? The futures are what? What ticker is that? Never mind. Let me go through. Any other question or not? Let me see. Rachel's asking BYD. 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 Wow. BYD is kind of messy. Can you see that BYD is stuck in a huge range over here and hitting the yearly pivot. Not much reaction. Okay. All right. And the 2-day time frame, and it's hitting the year at the lower range of the yearly pivot already. So at the support, it is somewhere around there also. But if you're asking me whether can buy, the trend is not very clear for the BYD. Okay, so obviously, if you look at the weekly time frame, this is an impulse move. Okay, and it's doing a consolidation. Okay, there's a chance that price could do this, but timing it can be a bit difficult. So unless you hold long term, okay, then maybe you could enter, because right now we are at a low of the yearly CPR. Okay, let's say if price, come to do a false breakdown and then hit go back up again, then potentially you could long, could enter. All right, of course you don't enter everything now. Okay, if you're long term wise, you can enter in a few tranches. Okay, can right. Semicon, it is not doing well. Semicon will use the XOXX lah. Okay, Semicon right now it is not the best. Okay, so can you see for Semicon SOX ETF? Previously, huge ran up. I know some people chase it. Okay, I know some people chase. For me, I just stay clear because I missed it. Then I don't have to chase lah. Okay, so after that push a little bit, now price is below the cloud, and we are hitting the cloud and the yearly pivot, and then there's no reaction. So kind of bearish. So we also somewhere near the low of the yearly pivot, low range. So somewhere around here. So we'll see how it goes. But based on the 2-day time frame, we are still on a uptrend. So nice correction. We could see price, tested this cloud support over here, and then the yearly pivot, lower range. Okay, then we could see a rebound. So this is also in line with the view of the S&P and the Nasdaq. So Nasdaq now back to sell off again. See, it's coming down again. So again back to Nasdaq. I think price could test the lower range of the yearly pivot. So next week, price could still come down a little bit lower, and then I am expecting a rebound. Okay, I'm expecting a rebound next week. Okay, short term wise, expecting rebound. For S&P, also the same, hitting the yearly lower range pivot, CPR, and then could be a rebound higher. All right, but it could be just a shorter term technical rebound. Mid-term wise, I still think that there could be more downside to go. Ken, any question so far? Stacking using wash and rinse, unless next week have a daily wash and rinse, then hard to see a rebound. Yes, if Stephen, if next week there's a wash and rinse, then that's the best lah. Okay, then they will kind of reinforce that the short-term technical rebound, it could be real, right? So yeah, best is with a technical rebound. Oh, sorry, I think there are people who ask me how I screen for stocks, right? I think there was some question, right? Yes, so I use this screener. Remove this. So market in now, I think I mentioned a few times already. So I have this screener based on different criteria and such lah. Okay, so I'm looking for maybe like wash and rinse with some oversold level with the pivot points and such. So this is a technical screener. So let's say, for example, I'm going to see what are the stocks that that could sell today. For example, I'm bearish so let's say I do a screen something like this, Okay, a screen. Then I will see these are the one. So these are the one like potential one. So I can screen according to market cap, like ANGI. Let's take a look. ANGI, that kind. So ANGI. I'm not asking to short. I'm just a screener to tell me that potentially there could be more downside like this. Like hit the S1 level support, rebound, cannot go higher, and then there's a wash and rinse. Then the price could go down lower. So I need to filter out I need to go screen through the filters again. You get what I'm trying to say now? Okay, can. So like the let me see whether I can show you or not. So let me see the chart over here. There's that. 1, 2, 3, 4, 5, 6. In 6 days. Let me see this over here. Historical. Let me see here. Sorry, let me browse through this thing first. Screen switch to relative strength. 1 week. Not here. 6 days ago. Is it something like that? Let me try it. Cannot get the historical. Somehow I just can't get it. I don't know how many days. Let me see the screen again. 7 days on screen. 4 days ago. Can you see over here? Yep, 4 days ago, I was trying to go through the stocks over here, right? So that DLO, as I mentioned just now, DLO came into the screen, so that's why how I screen. So I just check into DLO. I go through a few stocks over here. These are the Porsche Group, OpenTech, and such lah. So I think DLO fit my criteria, and that's why I shorted DLO. So I have a set of screener, as in some criteria over here lah. So most likely you understand what I'm trying to do. Okay, so I did screen like 5 days ago. Is it 5 days ago? Let me see. Screen. Can you see over here? Yes, 5 days ago. These are the screens that came out. So I was looking through some of the stocks over here, rank according to the relative strength, and go through this APP. It came out, right? So I'll go through. I see fit my criteria. Okay, so that's the reason why I shorted APP. I think 5 days ago. Yeah, that's how I screen. So I'm using market in out. So on the market, there are many good fundamental screener, but very few good technical screener. So market in out is actually one of the good technical screener over here. Okay, so I think let me see. MWA. If you want to take a look, join, you can take a look. Okay. If you want to take a look at market in out, you can go through it. Okay. This is the link. This is the link below. All right. I post a link comment, so you can take a look. So there's a lot of things you can go through with this stock screener as well. Can? All right. There's asking, will you make any long position in the potentially outperforming sectors indicated earlier? Yes. So I will screen again. So let's say, for example, I see some of the financial stocks, utility stocks, or commodity stocks that could be have some in the signal. Then I will go potentially long now. Can? So I'll have to see next week lah. So I have to see the screener. I have to see how the market react next week, and such. All right. How is market in out different from what do you mean by top screener or think or swim? Okay. Think or swim, you need to run the think script. You need to know exactly what you need to do. And you need some coding experience. For for market in out, let's say for example you want to screen something, all right? So you want to do a screener over here. Okay, let me just try to show you over here, market in out. Okay, let's say for example, a test. Okay, the test. Okay, you want to screen like I only want Nasdaq stocks. Then you add criteria. Okay, and then you want to add moving average price is maybe for example just cross above the SMA, right? Let's say 50 days moving average. Then you add criteria. You add other thing like Ichimoku Cloud, for example, our price is above. No, where is it? Price is above the cloud. Then you add this, that kind lah. Okay, so you want I don't know some price action like new high, new lows, that kind lah. So you can add a lot of things. So pretty comprehensive, and then you run a screen, that kind of. So these are the stocks that will come out lah. So you can take a look at and such lah. Can so Think or Swim one can screen. Think or Swim screener is not too bad, but I prefer using these market in out, and they have a lot of other things also. For example, like they have the growth leader, so where I can see what are the leading industry, for the past 1 week, for the past 1 week. Okay, as I mentioned before, the brewers are pretty strong. Okay, silver, gold. All right, for the past 3 months. Okay, what are the best one? Okay, utilities are the best. That kind of. I think numbers could be wrong, but brewers, materials there lah. So what are the worst one? Okay, and such. And what the sector growth and such. Okay, so they have quite a number of things. Can? All right. China stocks are going to delist soon. That they could delist. But okay, let's say for example, Baba, they delist. Okay, you can transfer your stock ownership from the US to the Hong Kong one. So it's a fungible meaning that it is the same whether it is listed in the US or in the Hong Kong. So you can transfer them. So I think not much of an issue. But the only thing is that the TT stock I think could be slightly trickier, because I think there's a no playbook, something new, because I think they want to ask them to delist. Okay, but other than that, the rest of the one that has already been listed in US and they could list in Hong Kong. Okay, so should be quite okay lah. Can? All right. Booking is telling me 1 a.m. already. So I think, yes, I think I should stop soon. Else I could talk until 2 a.m. Okay, I think that's all for today. Any question? Last question. I've just choose one last question. And if you think that you enjoy my sharing today, just give me a like and share also, and tell me a yes if you like my sharing today. Okay, give me some encouragement. Also, do join our MarketWise Asia Telegram channel. So I always give updates and such lah. All right. So where is it? Oh, did I think that? Where's MarketWise? Yeah. So for those 200 plus for you who are still staying with me, do join our Telegram channel. Any Facebook Live, any interesting updates like I share with you guys over here. I will always post that the booster webinar, upcoming summit and such. So we have about 4,500 people in the channel already. So do join. Okay, Ken? All right. Market in now, yes, it is not free. It's not free. It is paid. Okay, it is paid. Yeah. Wendy is asking how to set up the yearly pivot range. I think I shared that just now. I think maybe you're not around. So over here, where is it? This one, YouTube tutorial. So I post a link in the comments. Okay. Right. Yeah. Okay. Thank you guys for the encouragement. All right. So so no need to be scared of the market right now. This is still a normal pullback. My parting word is that don't be scared. I think there are some fear mongering that the crash is going to come soon and such lah. Okay, don't be scared. Okay, right now it is still uptrend, long time frame. When it is really in a really downtrend, the price will tell us one. Okay, don't be scared. So Yeah, long term still uptrend, short term bearish. Okay, short term could be a technical rebound term soon, but mid term 1 to 2 months could be bearish. That's my overall view. All right, Ken. So I think that is all for today. Don't want to hold you up for too long. Thank you so much again. Have a good weekend, and I see you guys again next week. Okay, 晚安，拜拜。